Good afternoon, everybody. My name is Simona Kalvoda. I'm running the Czech Green Building Council, and I would like to welcome you to the first joint webinar of the Czech Green Building Council and the Royal Institute of Chartered Surveyors that we organized this year. We have done these meetings before, about 3 of them, and today we have what appears to be a very interesting topic, valuation of buildings. We believe it's going to be a very good event because we have over 140 registrations, and I have my esteemed colleagues here who will present the topics. Can I ask for next slide, please? Vendula Maršová from Colliers will make a short introduction to valuation, the basic principles, regulation, why it's good to evaluate, what are the benefits, and also what impact COVID is going to have on the valuation of the buildings as a process and the value of the buildings. Then Richard Hawke from Cushman & Wakefield is going to talk about the impact of green certifications and real estate valuation. Hello, Richard. And Bert Hessling from CTP Invest will talk about developers' view and perhaps will touch on the tenant requirements, valuation of industrial buildings, and so on. The whole event will be moderated by Pavel Kliment from KPMG, and I would also like to thank KPMG for offering us this lovely studio where we streaming this this event from, and from the whole organization. And here I hand over to Pavel.
Okay, welcome everybody from my side as well. I hope you can see us now in the studio. So again, from my side, welcome to Richard and Bert. Thanks, Simona, for invitation. And we have Vendula joining us online, so she will be speaking remotely. Now we have some very good questions. Can everybody please stay muted? That would help. We have very good presentations today, but we also hope to have some discussions between the presentations, and there is a possibility also for you to raise any questions. If you can, please use the chat function within the MS Teams for raising any questions. We try to cover them as we go through the presentations. I must say, from our side, we are happy to host this event. It's our first event with the Czech Green Building Council, so I'm very happy to host it. And I think, as Simona said, there are quite a few topics. At the beginning, we want to talk about the general perspective on the market, what is happening. Indeed, COVID implication drives the value of the properties as well. And then our main topic today is sustainability, building certifications, environmental certification, and the impact to the properties. So now for the introduction of the market, I would hand over to Vendula. And I will put on her presentation and basically move through the slides as she instructs me to move. So Vendula, over to you.
Okay. Thank you, Pavel and Simona. Thank you for introduction. And thank you to the Czech Council for Green Buildings and RICS for organizing this event. And hello, good afternoon to everyone being present. And let me talk about the valuation and latest facts and trends on the Czech real estate market. So the agenda, I would like to a little bit talk about RICS, basics and principles of valuation, followed by current pandemic, economic and real estate market situation in the Czech Republic. RICS. Pavel, can you maybe move to, I forgot to mention next slide.
Yeah, just tell me the move and I move.
Yeah, okay. So RICS, what is it and what the abbreviation stands for? It is the Royal Institution of Chartered Surveyors. That is an organization that brings together experts working in the field of real estate, development, and related fields, including construction, property valuation, building management, and so on. RICS delivers the confidence throughout the respected global standards adopted by over 130 qualified professionals across the board. Our valuations are made according to the Red Book on the basis of market value, which relates to the amount that a hypothetical purchaser would be prepared to pay for the property at the date of valuation. Okay, we can move to next slide. So some basics about valuation. What is it about? We can define it as the estimation of the worth of something, in our case, the real estate property, carried out by a professional valuer. It is a long analytical process of determining the current or projected value of an asset under certain assumptions which we adopt. What we value? We do value all type of commercial properties, including office, retail, and industrial sectors, as well as land and various residential projects and development projects, including as well mixed-use properties and hotels. Who do we value for? Who are our clients? We provide the valuations to local and international banks present on our market, private investors, funds, and real estate owners and occupiers. Well, basically whoever asks us to value the property. When they need it and why we run the valuation, it's for all different type of purposes, internal and external. Majority internal decision making and loan security purposes, but it can be done for auditing, reporting, accounting, or whenever the clients are disposing or acquiring properties. Next slide, Pavel, please. Here is the valuation process shown step by step. First, we need to agree with the client on terms, timing, and fees by signing a letter of engagement and solving any potential conflict of interest. Then we run data review and property inspections, followed by detailed market research and analysis in order to prepare the draft calculations and reports. And if everything goes right, we can issue the finals. If not, and if there are any new circumstances, we review our valuation. Next slide, please. So what are the major market value determinants? It's the property itself. It depends on type of the asset, which sectors it comes from, when it has been built, and in what quality. Does it have any certifications? What is the macro and micro location of the property? Is it well accessible by car and public transport? If the property is not newly built, what is the property condition and what is the required capital expenditure? As we run the investment valuations, we review income from the contracted lease agreements, and we do need to know what are current expiries and what is the vault of the property. Are there any possible break options and penalties to be paid by tenants? What are the incentives that were given to the tenants? What are the level of service charges on and non-recoverable costs which are bared by the landlord. And it is all about the quality of the leases and covenant strength. Further to that, we do really need to have market knowledge, and we need to know the market rental level and rent freeze and fit outs being offered to the tenants currently on the market. And the question is the lettability of the property. If it becomes vacant, or if it is vacant, can it be let in 2 months, or does it take longer? This need to be supported by relevant comparable rental and transaction evidence. Any other matters needs to be considered as well. So, next slide, please. So what next is impacting the real estate market? There are some headlines here on things which are impacting the decisions making, but also yields and values. It's obvious that currently it is the COVID situation with associated support measures and various levels of lockdowns. Vaccines next, which are awaited by the whole world as a way out of this pandemic. Further, it is influenced by economies and cycles and situations on labor markets. We can further mention politics, corporate governance. There are obviously risks associated with companies which are not doing very well. Energies and environmental issues that offer to investors potential long-term performance advantages. Also, the business and private travel restrictions are always impacting the decisions of investors. Next graph, please. Here we have the COVID disease evolution on the left-hand side. That was obviously the start of the pandemic in February, March time back in 2020. We all had the first wave within Europe. Some countries were really badly hit, like, for example, Italy or Spain, but Czech Republic at the time did very well. However, now the Czech Republic is in the state of emergency from the first half of October until now. And although the first wave was managed well in the spring, the second and third waves are a bit different stories. And we had some of the worst numbers of new cases across the board. So basically not only us, but the whole world is awaiting the vaccines, and as this is the way out of that. So when we spoke about the vaccines, the next slide shows the graph on population at risk versus vaccination rates. With the EU approval of new vaccines late in December, the government has begun the distribution to most endangered population groups and key medical staff. The left-hand side graph shows population at risk in percentage. Majority of the countries are more or less similar. Roughly in the Czech Republic, there are about 4% at very high risk. And these are the very elderly people, then followed by the healthcare workers, which make up another 4%, and then the rest of the population with 70+ people and teachers and the rest. Ideally, we need to get about 4.5 million people vaccinated as soon as possible, but there is but. So there are delays, and we need to do better. Hopefully, this will happen between now and middle or end of the year. Next slide, please. So COVID is obviously impacting economies and labor markets globally. These graphs show where individual countries are. 2020 on the left side and 21 on the right one. The bottom is showing the GDP growth and or decline in this case. So almost every country in Europe had negative growth, specifically in the Czech Republic, -6%, and unemployment grew by 2%. Overall, the level of unemployment is still very small, but we can expect that will rise. Looking at 2021, most countries are expected to have a positive growth. The Czech Republic is expected to grow by 5.5%. Economically speaking, Czech Republic should rebound based on success and vaccination, but this is not guaranteed, of course, and we can see, as mentioned, increase of unemployment throughout the year. This is mainly as a result or impact of travel, hospitality, and food and beverage sectors. So we can move to next slide. This is an investment volume graph in the Czech Republic that is showing which sectors are or has been popular. Last year, the volumes were down by 16% year on year. 2019 was quite a strong year, but nothing to compare to 2016 or 17, which were really strong. It is obvious that around 50% of last year's volume was Residomo portfolio acquired by Hamstaden. The main message is everything is down. However, essentially, it is not about the investors. They are keen and they like the Czech Republic. It is about availability of the product. No one is selling, and as there is no willingness to sell with discount. We don't see much of the distressed asset yet, but it will probably come in some way. And investors will be targeting core office, any industrial and private rental sector. Probably retail and hotels if distressed. So we can move to the next slide. Very quickly, total of 47 transactions worth 2.7 billion euros were recorded last year. Asset down by 16%. However, it was still above the 10-year average. This asset heavily supported by the Residomo transaction. If this was not there, without it, it would meant the lowest volume since 2013. Looking at split by sector, apart from the other, the biggest portion of 22% was transacted within the office sector, followed by retail and industrial. The capital is still dominated from EMEA and CEE. However, significant portion of investors are still the local domestic investors. The yields, we will look on that in another graph more in detail. And the main message or outlook for upcoming months, I would say, is that industrial and residential sectors are worth interest. Hotel deals and hotel and retail deals, except retail parks and supermarkets, are still expected to be most challenging. New transactions are taking longer than anticipated. And although we see demand, we also recognize that there is a certain caution from investors, and therefore it might ease the pressure on pricing and yield compression. So we can move to next slide, which shows prime yields reported as of Q4 2020. Basically, yields for high street retail properties and shopping centers remained on the same level as the previous quarter, despite limited transactions. Transactional evidence for offices and industrial assets, prime yields are corresponding with the closed transactions. So we have offices at the level of 4.25%, retail shopping centers at 5.25%, and industrial is historically lower than the retail and stands at reported 5%. This graph shows yields on all these sectors, and also the 10-year European bond and interest rates, which is the safest and returning nearly zero. When we look back into 2007 and the 2008, there was a lot more conversion between the yields and the bonds. All sectors were close to each other within 50 basis points, but also within 100 basis points from the bonds and interest rates. Now, when we see we are in 2020-21, the spread is about 400 basis points. So it is still better to put money into the real estate. Now we can concentrate in more detail on individual sectors. So if we can move to next slide. And we will start with the office sector. Prague office market. Some of the numbers, I will now talk about lots of numbers. Stock reported as of Q4 2020 was 3.75 million of square meters, with expected supply of nearly 100 square meters in 2021, out of which 30% has already been pre-leased. 7% vacancy is still low reasonable level. Prime rents keep stable between 22-23 euros per square meter per month. And what is the outlook for coming months? Definitely the supply is or will be below average. Space for immediate subletting will increase. New leasing activity is a question. Developers need to focus on pre-lets, and generous contributions and rent freeze can be expected to attract tenants. Working from home office becomes part of our lives. Next slide, please. So here are some facts about the Czech industrial market. There are currently about 350,000 square meters under construction, more than half in Plzeň and Ostrava regions. By the end of Q4 2020, the vacancy was low and stood at 4.20%, which was for about 40 basis points even lower than in Q3. And the continued low vacancy rate is caused by the limitation or limited availability of suitable land with permits. And we can say that landlords are still in a strong negotiation position. The level of pre-lease space under construction exceeds 53%, and due to continued market situation, we don't really expect the trend to change significantly, and developers will be reluctant to speculate with new developments. The healthy supply of new product proves that the Czech Republic is still very sought after country within Europe for development of new industrial and logistic properties. The next slide, the last one, it's about the retail market in the Czech Republic, which is currently most challenging. It's worth to mention that expected drop of sale for 2020 is nearly by 1%, and 16% share of online sales from the total retail sales in 2020. Retail sector is definitely going through turbulent changes brought by the rise of e-commerce that follows the international trends, and it's heavily hit by the current situation. And we can probably expect increased vacancies within shopping centers, and there are already companies leaving the Czech, the retailers leaving the Czech market, and or announcing bankruptcies. And the question is, what is the sustainable? What are the sustainable rents within the shopping centers? This was my last slide, and I think I mentioned all the important things, facts about the Czech market, and thank you for help, Pavel.
Vendula, thanks a lot. Great presentation. And many insights. Probably I'm now getting some echo, which might be from you. If you can mute. Thanks. It was really good to see all the details on the current situation on the property market and the impact on valuations. I do not want to, because we could spend really an event on the approach to valuations under COVID times. So I'm just going to ask one question, basically using the fact that I have 3 valuers either in the room or online. Well, do you believe that now with the actual property valuations that the market is liquid enough to basically give enough comparable transactions, or are we a bit back in a, say, 2008, 2009 situations where it were more, valuers' view for some time that created the fair value of the properties? What's your view?
I think that it's sector by sector, and we still have evidence for office and industrial, even though it's limited. We do have, and we believe that with some kind of market sentiment, we can run the valuations. But in retail, we still have evidence for the retail parks and supermarkets. And however, shopping centers, yes, there is basically no evidence or very limited. So we do use what is available, and we just have to adopt assumptions and use common sense and the market sentiment.
Okay, that's good. Richard, you would comment?
I concur absolutely. The one thing I might add is that within the valuation industry, we have a device that's often used in situations like this where there is more limited evidence, called a material uncertainty clause. It's something that the Red Book allows us to do. And just as Vendula has been saying, on a sector-per-sector basis, since the start of this crisis, when we applied it wholesale to all of our valuations, we've slowly been removing that from different sectors. And the only sectors that I think it's still really relevant to is parts of the retail market and parts of the hospitality sector. So I agree it's an issue, but it is very much sector dependent.
Good. But I presume you share that. I think there was an interesting slide which summarizes the market situation, which Vendula was showing on the spreads.
Yes.
And that I found quite saying a lot about where we are with real estate, and that we are nowhere close in 2008 and 9 because it has been visible what the spreads now are. So even a big opportunity for some of the investors and developers.
Yeah, we're hoping that the spread will shrink. So I see huge opportunity there for further value increases.
That's right. All right. Thanks a lot, Vendula. Thank you. If you can please stay with us, that would be great. And we're going to be moving to our main topic, which is basically the impact of the environmental certifications on the property values. And I'll put on the presentation. Thanks. For Richard, and I hand over to Richard. I hope it's going to all work fine. So if you should be able to move through the presentation.
Well, I have 2 chances to choose which clicker button to press. So we'll see if I get that right first time. Well, first of all, thank you, Simona, in particular, for inviting me here today. It's great to have the opportunity to speak about something that isn't COVID. I did a quick scan of my presentation. I don't think I used that word once, and I'll try not to use it once, although I do think it is relevant to the topic, actually, COVID. We're going to be getting some questions from Pavel later about how it's maybe accelerated a lot of these green things, so we'll see when we come to that. So anyway, thank you again, and thank you to everyone who's listening at home or in your offices. So just a quick bit of information about who I am. So I'm the head of valuation at Cushman & Wakefield. I've been in the Czech Republic and the CEE region for more or less 20 years. So whilst I don't profess to be an expert necessarily on green issues, I am an expert in valuations, and green issues are certainly a topic that is becoming much more a part of our work. Just to begin to introduce the concept that we're here to discuss today, I think perhaps the best starting point is just to really take a step back and just think about how the environment and green issues have become an absolutely central part of all of our lives. I just chose a few random areas where green is a prevalent topic now. Transport, of course. You see a picture there of Tesla, which is I think seems to be the main focal point when people think about environmental issues. Electric cars. But there are many other aspects of our lives which are changing. The way we generate power. I mean, huge moves away from coal mining, certainly in the UK where I'm from, and also in the Czech Republic, down the Ostrava region. In terms of materials, in particular, they're recycling. I mean, personally, I'm in absolutely no doubt that as a family, we take more rubbish to the recycling bins than we do put in our normal refuse bins for the refuse collectors. So that's changed my life. And I think also, food is another area where there's a big drive towards more environmentally friendly ways of producing food and meat versus vegetarian. So I don't think it's disputed that green and environment is absolutely integral to everything that we have in our lives right now. This slide really just addresses some of the motivations because it's much more complex than just the environmental side of things. Clearly, I think that's at the top. People want to save the environment. People want to improve the environment. People want to make our world a better place to live and a healthier place to live. But there are lots of other motivations that are driving us along here. There are moral dimensions. I'm not quite sure why I chose the picture of the cows, but I think people know where I'm getting at with that. There are, huge societal changes. The number of protests and demonstrations have in respect to green issues is growing. Can everyone go on to mute? I think we do have a bit of feedback in the room here. Thank you. So there's huge societal drivers which are being accentuated, I think, by the change in generation. Certainly in the younger generations, the whole environmental piece is much more important, and people's values are much more led by environmental aspects. And finally, there are political drivers. Politics is all about meeting the needs and demands of society. So these societal pushes, these societal changes are driving politicians, and that's also driving regulation, which is clearly, very, very fundamental to the area of real estate. And we'll begin to overlay these motivations that I'm addressing here onto the real estate business shortly. But clearly, this is not an exhaustive list. This is just really more for the thought process. I thought before I went into the lead topic, which is about property valuation, I'd just demonstrate how important and relevant real estate is to the environment. When I first saw this slide, I was a little bit shocked. But then you just think about it, and of course it's absolutely logical. Every aspect of our lives, every dimension of our existences, somehow our buildings are a fundamental part of that, whether it's how we're shopping, whether it's where we work, whether it's where we live. Buildings are literally everywhere. So it's quite logical that buildings are the biggest sector, or the sector is perhaps the wrong word, the biggest contributor to a lot of the environmental problems that we have. So if you're going to tackle environmental issues, clearly real estate's a great place to start. I go back to the picture of the Tesla car. Transport's actually far less significant than building. So we think a little bit too much about Teslas, and we should maybe focus a little bit more on properties if we're going to tackle this problem. In terms of the evolution of the issue, it's clearly going to remain a big topic for the future. We're building more buildings. This is just part of the evolution of cities and towns. So it's inevitable that in the next 10 years, and the next 20 years, and the next 30 years, the impact that buildings have on our environment is going to become bigger and bigger and bigger. And of course, you consider that against these motivations for being greener. Clearly, there is an impact point, and these issues are colliding, and things are definitely changing. So just coming to the central topic, the central brief that I had from Simona, which was to introduce how property valuation has been changed by a lot of the issues that I've just talked about, a lot of these green topics. How has my profession as a property valuation industry changed? But indeed, I think maybe we come to this in the discussion, but how have property values changed? So I put the first slide up because I think when we are thinking about valuation, we have to distinguish that there are two avenues here. There are two questions we need to ask ourselves, and there are two questions that we need to address. First of all, do green issues, do environmental issues, this green certification, do these have an impact upon the process of property valuation? The answer is, of course, yes, but we'll move to that shortly. But I think secondarily to that is, do these issues affect property valuations? I've gone in the wrong order there, but there are two questions: property valuations and property values, and we'll look at those two different things. Just to recap and to put us all onto the same page, what is a market value? What is a property value? So I've put up here the technical definition from the RICS. I can't recall the last presentation I did where I didn't put this definition up. although having said that, I'm fairly sure I couldn't recite it word for word. But anyway, market value, it's an estimate which a valuer provides to a client as to how an asset would transact. We talk about willing buyer, willing seller. But basically, this is what we're talking about. It's the exchange price. It's the value. It's the value, and how green issues are affecting that is the question. The answer to both questions is definitely yes. Green issues do affect property values, and they do affect the property valuation process. But as I looked at the topic, it became clear to me that actually the main driver of change in value, it's never the valuer, it's the market, and therefore we have to assess whether or not the market in the complex with the complex environment that it is, how is the market dealing with this issue? And if the market's dealing with the issue, then certainly it's very relevant to the process of valuation. If green features have no impact upon market value, they're not relevant. That's quite obvious. But the main point I wanted to make with this slide is that I don't decide what values are. Valuers do not decide what values are. It is the market that does that. So I think the most important topic that we have to discuss today isn't necessarily about the process of valuation. It's about how green issues are really affecting the market. So I thought we would move to the idea of look at the drivers. What is driving developers, investors, and all the various stakeholders within the real estate industry? What is driving those parties to look at being more green in the way they behave? So I've listed out 5 things here. It's not an exhaustive list, but the obvious one is lower operating costs. Clearly, a building that can run more efficiently is going to be cheaper. We'll look at that in a slide coming up. There's also environmental regulation. Clearly, governments are responding to the demands of the voters, and voters are demanding that things go greener. So regulation's an absolutely significant driver. Social responsibility. I think all companies now have within their PR strategy at least some aspect of green. So this social responsibility, whilst it is a noble goal, ultimately it feeds through into the more commercial drivers of branding and PR. And linked to that, we then get to these competitive forces. Developers now understanding the branding and PR factors, understanding all of the positives that their business can get in terms of its profile, are looking to compete with each other, and that includes things like certification, and we saw that in the most extreme form in the Czech market with the success that CTP recently had with their certification here in the Czech Republic. The good news and the bad news is that whilst a lot of this is moral and noble and good, it does merge with commercial interests. So I think that really is why these green factors are going to become much more significant, because they are entirely intertwined with success and growth in terms of value, in terms of business, and that's not a bad thing. If green and financial reward are harmonized, that's going to be very, very positive for all parties concerned. So just to zoom in a little bit on a selection of those drivers, starting with the regulation. Clearly, in every aspect of our life, regulation is becoming more and more extreme. Developers are having to change their buildings, materially change their buildings in terms of how they operate, both in a reactive way, which is in response to new regulation, but also proactively. I think with the slides that I've already shown, I think I've hopefully demonstrated how these issues become more and more relevant. So I think those developers that look to stay ahead of this problem, that lead the change here, are going ultimately, they're going to be the ones that ultimately have the longer term success. And if you're being proactive, you're winning. If you're being reactive, you're always chasing the problem. Zooming in on the social responsibility, branding and PR piece, I think this really drives home the fact that being greener and being more financially successful are now harmonized things. Certainly at Cushman & Wakefield, we have a lot of green initiatives, and I was speaking to Pavel earlier. I know KPMG are doing the same thing, CTP. Any company you talk to now is using the green issue to drive their business forward. But that can't be entirely hollow. It can't just be about PR. Ultimately, the staff, the tenants, the end users of products are going to demand that there is real action in terms of these PR factors, and Bert maybe we'll talk about that later. He's got some really good ideas here. In very, very basic terms, this is also going to affect the investors and the tenants as well. These parties are going to demand that the buildings they occupy are clearly, more environmentally friendly. So there are real performance implications, positive performance implications for real estate. And again, just to stress, and there's nothing to be cynical, there's nothing to be concerned about. There's no reason for it to diminish the positive and moral and objective motivations, but being greener is good for business, and I think that's absolutely clear at this point. I just popped up a couple of very recent bits of PR that I saw on LinkedIn. The aforementioned BREEAM certification process that CTP have just finished, but also another report that that Prologis recently produced just for some equality. And both really interesting in their own right, but they're just two examples. I think if anyone would pop open LinkedIn now, I can pretty much guarantee at least one of the posts that you read today has had something to do with the environment and green. I'm not really talking too much about valuation at this stage, but I'm going to try and maneuver the topic in that direction now. In terms of my profession and how there are real changes, the most obvious one is actually cost of occupation. When real estate professionals talk about the real estate market, generally speaking, they talk about only half the problem, or let's say 90 to 95% of the problem. When tenants look at real estate, they have two things. They have a rent and they have a service charge. Those two things combine to equal the cost of total occupation. And it's definitely a clear trend now that as buildings become more efficient in terms of how heating systems work, cooling systems, electricity, a lot of the CTP assets that I've valued historically have all got solar power on the roof. So there's a huge change in terms of the technology that buildings use, and that is having impacts by having a negative effect on service charge. And if you have a lower service charge, arguably you can command higher rents, or you can at least be more competitive. So it's just one example of practically how green issues can materially affect a valuation. I thought I would also just examine the problem from the perspective of all the different stakeholders in the market. So going around the room, tenants, they definitely want to present themselves as being greener operations, and that will require them potentially either through corporate regulation or just by local regulation, internal policy, that they would occupy a building that has X or Y certification. I think we see that already. That's with us now. It's not such a big, it's not everywhere, but it's a feature of the market. Responding to that, developers, of course, will want to make pretty sure that their buildings meet these requirements if they suspect and know that tenants are going to require those things. So it's clearly also affecting developers. Investors, I confess, this is the area where I probably see the least impact at this point, but it is coming. It is coming. Maybe I don't see it because we're not necessarily dealing with the investor's specific motivations. We're actually reacting to a financial equation, and by the time we see the problem, perhaps those aspects are already factored in. But investment will certainly need to become greener, not just for the PR, but because most investors, let's face it, who buy buildings, those funds and vehicles also have investors downstream, and it's that downstream influence that will also drive us to become greener. Governments is fairly obvious. I think we know that, and tied to that, the public certainly, who ultimately represent the entirety of this problem, really. They certainly demand that things become greener and more environmentally aware, and therefore the question mark next to the photo of Richard: do valuers need to deal with these issues? Absolutely, we do. We can't ignore it. It's really a new and pivotal point. So, how do these issues affect the process of valuation? In the real estate context, a greener building has the potential to be better occupied, either through being more competitive in terms of rent, either because it meets the requirement of more tenants who want to become greener. So I think there is a marketing positive in that respect. Higher rents, we talked about that a little on a previous slide. Demand, I mean, all of these are really talking about the same thing. Positive public profile. These things really do, or have a real effect. In terms of the valuation process, it is sometimes difficult to distinguish exactly to quantify the impact. And I think that is maybe something we could talk about, because the quantification is actually the problem. I can be super positive about this really having it, but it's that quantification is still a bit of a challenge. However, things that valuers are changing. Our reporting, every valuation I now see, including the valuations that we produce at Cushman's, and I'm sure Vendula at Colliers, every report now has some reference to whether or not the building has green certification, how environmentally efficient it is. You have these ratings, and I know it's the same in residential property. So, if you're a consumption of valuation reports, or you are a producer of valuation reports, compared to 10 years ago, this environmental is now, in the same way that it used to be about property title, about tenancies, about planning, the whole environmental side of things now sits next to those issues with equal force within the way we report. In terms of how it affects the property valuation process, the choice of comparable evidence is now critical. When a valuer is valuing a building with specific characteristics, obviously our objective is to compare that building with buildings that have similar characteristics as well. So as all these positive features begin to filtrate into the transaction market, into the tenant market, naturally they will be picked up through the way that valuers use comparable evidence. So it's not an explicit reflection of having a specific certification, because like I said, valuers will not decide how these issues affect values, but because of the comparable evidence, this is how it will filtrate through into property prices. And also, I think valuers, it's great to have the opportunity to discuss this today, but I think one of our key things is actually we provide advice. We don't just provide values, although I think everyone who opens a valuation report pretty much jumps to the value, but there is a whole reporting process that goes around that, and that reporting process, as I say, is talking about environmental issues. It's bringing that subject and putting the property into context against that. So, whilst I do maintain that it's the market that's going to push these issues in terms of pricing, I think the valuation industry is playing its part in the way that it should. Some final thoughts. I think I'm more or less on time, slight overrun. But to stress, the market will decide how these subjects affect pricing. But I think we've seen all stakeholders involved are pushing for this. I guess the final thing I wanted to say is I think green technology and environmentally friendly buildings, I think they are now part of what being a quality building is. I think it's very difficult to distinguish from those two things. So I think if you're looking to develop quality and you're looking to drive quality products, I think it's a natural part of that development process that you will be integrating environmental technologies. You'll be getting green certification. Quality and green, they're absolutely tied together. So with all that said, there's still a long way to go. But I do think that the property industry and the property valuation industry is playing its part, and we're all contributing to something that I believe is positive. And as part of that, once again, Simona, thank you for letting me be part of this today. It's been a very interesting thing to think about, and thank you everyone for listening.
I could kiss you for this presentation.
Well, thanks a lot, Richard. I must say I really like the way you put the environmental certifications and this whole sustainability process into the context, because the topic today was, how does it affect the valuations? But really, I think what you delivered is the answer that this is actually not the right question, because it is all in the context of commercial, quality of the asset and valuation being part of that. So I really like the way it's all connected. I would just ask. I do not want to get into specific, percentages and difference in the value. I think there might be various views on how it currently stands, but maybe your expectations towards the future. Now, commercially, this is happening because of good reasons. Now we have in the comparables, we have still a mixed situation. Old properties without any certifications, new one with certifications. Probably in the future, we can expect more of these comparatives being certified. So do you expect the difference in these values actually to grow in the future? That's the first question. And second question, how fast do you think the process will go? Are we, till the market fully reflects the certification of the buildings in their values? Do you think we are talking 5 years? Do you think we are talking shorter periods, 3 years? It's going to be a fast process or a relatively slower one?
I guess it's difficult to put a time frame on it, but it's not difficult to say that it's accelerated and it's coming rapidly. So I would ear towards the shorter time frames in this respect. Just on the subject of certifications, I think there is an issue for certifications, for the whole certification industry to address, and that is how universally these things are taken up. Because at the minute, it doesn't, just because you haven't got certification doesn't mean you're not a green building. So I think there is a. I mean, maybe we can talk about this, but I think part of your question is really about how quickly the certification is taken up across the market. So that would be how I would respond. Mm-hmm.
And I know you were trying to avoid any COVID, and congratulations on that. But maybe just I
forgot about it.
Just a simple question: do you believe COVID will actually accelerate the whole process, or not?
I would, again, absolutely no doubt that COVID's changed how we think about the environment. I remember when this whole thing first started out, they were showing the satellite images of various cities, and you could see the smog and things that they lifted. And I think that just, if you were ever skeptical about the environment and the impact of the industry and property, then that blew it away. We can see if you slow down a bit, things get better. So yeah, COVID's definitely going to accelerate this. But I would just add a slight twist in here, is that for good and bad as well, because ultimately we're in the real estate industry. We want that to develop and be successful, and it will continue to do that. But what we've seen actually is actually if you use real estate a bit less, that actually has a bit of upside as well. So it's a very, very complex ecosystem that we're in. But yeah, COVID absolutely is a major accelerator.
All right. Well, thanks a lot. And I think we have a great opportunity of having Bert's view as a representative of a developer and investor on what actually it means from, well, not only your perspective, but also the tenants, most importantly, the tenants' perspective, and how do they reflect the environmental aspects of the property. So I hand over to you, and I'll try to put on your presentation. you can get the, yeah.
The black button.
Thank you, Pavel. I will not talk about why sustainability is important. I think we all know that sustainability is important. That's without a doubt. I will share a little bit about what we do at CTP with regards to sustainability. Maybe before we will start the video, I would just maybe briefly introduce the topic and what I will talk about. So I will cover three things. I'll talk about certification, I'll talk about carbon neutrality, and I will also talk about energy. Well, sustainability at CTP is super important for us, and that's why I'm also very happy to be part of CTP, because I've got a great story to come back with when I go home to my wife and kids, that we're trying to make a good impact on the world. And what we actually did is we used the first lockdown to completely rebrand. You probably remember the old logo of CTP, a bit aggressive, red. We decided that one of the reasons why we decided to rebrand is sustainability, actually. We felt that we are more humane, we are a bit warmer, we are a bit more social, a bit greener. So we used the first lockdown actually to completely do an entire rebranding exercise. And that's being explained now in the video. It's just a 1-minute video, but I think it very nicely captures why sustainability is so important for us at CTP. So if you could try and show the video right now. It's all nice and green with birds singing in the background. We do sustainability, we do care, and we really do care because we're very serious about it. So 3 topics that I will quickly cover is the certification, carbon neutrality, and energy. So starting with certification, as Richard already mentioned, we successfully managed to certify the entire portfolio of 292 buildings across 6 countries. We did that very recently, and all buildings are certified BREEAM in use to a level of very good or higher. We're the first industrial developer to certify all buildings, and we did not only certify new buildings, but also existing buildings. And one of the great benefits of certifying our buildings with BREEAM in use is that it forces us to actually recertify every 3 years. And for us, it's not just about the certification, but for us, it's also a great tool to improve the quality of our buildings. So how this process went is that every building was being certified. There were certain things in some buildings that had to be improved. And then we invested money into making these building improvements in order to get to a certain level of certification. What can you do when I talk about things to improve, like the quality of a building? Is we're looking, of course, a no-brainer almost these days is to have LED lighting. A few years ago that wasn't the case yet, but now all buildings have LED lighting, have efficient ventilation systems with heat recovery. You can do things like creating energy islands, using photovoltaic panels on the roofs. One thing that is a very important one is actually BMS, a building management system. One thing is the hardware, but what's actually even more important is the software that comes with it, and then the people that come with it. And I will talk a little bit more about that later. It's not just about like developing a high quality building. It's actually about what's more important is how you actually run the building, how you manage it, and what you do to improve the performance of the building. Other things that you can do to get a good level of certification is things with rainwater management, retaining rainwater, reuse of grey water, for example, for flushing toilets, etc., etc. In terms of carbon neutrality, the logo in the upper left corner is actually from last year. We set ourselves a goal to have carbon neutral operations by 2023, but we changed it now to 2021. And I'm quite sure that we were already carbon neutral with our operations at the end of last year. We just didn't have the systems in place to actually properly capture the data. So when we talk about carbon neutrality of operations, then we're talking about like what we as CTP produce in terms of carbon dioxide. So we're looking then at the running of the offices. We're looking at transportation. So that's use of cars. We have quite a big car fleet. We travel. We also travel by planes. That's about like 1/3 of our CO2 emissions. The other 2/3 is actually related to the buildings, not what the tenants are consuming, but like when we have vacancy in our buildings, or when there's certain costs related to heating, ventilation, cooling that we cannot recover from tenants, then they come on us. And so this is what we also then include into the whole calculation. So how can we be carbon neutral? It's by, of course, trying to minimize these costs, but we will still have, not these costs, but we're trying to minimize these emissions. We will still have emissions always. So what we are doing is that we're offsetting them. There's basically two ways how we offset them. It's through solar on roofs, and the other thing is other forests. So we bought last year 100 hectares of a forest in the Czech Republic, and our goal is ultimately that we would have 1 square meter of forest for each square meter of our portfolio. Maybe there is a video behind the forest, if that can be shown. Why actually it makes sense to, doesn't work? Okay. Well, I got this question from my wife, so why does it, I'll be honest with you, yeah? So she was asking me, so why, how does it make sense to actually, to buy forest? The forest is already there, so what's the whole point? It's also about like what you do with these forests. So what we are doing is that we're actively managing these forests by increasing biodiversity. So we're planting new trees, and we're not planting only one species of trees, but we are actually planting a wide variety of different types of trees, so that you create like a solid ecosystem within that forest, so that it will actually capture more CO2 than the majority of forests that we actually see around us. So yeah, and so that's carbon neutrality of our operations. That sounds easy. You just have to invest some money. The big thing, so the huge challenge for us, and we have set this challenge for us, we want to have a carbon neutral portfolio. So now we have 6.3 million square meters of buildings. We plan to have 10 million square meters by 2023. And we don't plan to stop there, but to continue to grow. And our aim really is to have a carbon neutral portfolio. And then we're really talking about being carbon neutral throughout the entire life cycle of a building. So that means the construction, the operation, and then also the demolition.
By when?
By when, we didn't set a target yet, but we think we can do it within 15 years. So, for example, many governments are now setting targets that they want to be carbon neutral, the economy, by 2050. We think we can be much faster than that. And the last topic is energy. So there's basically three things that I just wanted to quickly mention here. Is of course building quality. So if you have a higher quality building, then the building you require less to actually heat the building, or you will have lower utility costs basically. LED lights, better insulation, and then the BMS system as well. So that's the smart metering, the second one. So what we do now standardly in all our new buildings is that we also install building management system, and with it comes then the software, so that the tenant is actually provided with the software so that they can actually see how they are operating the building. And then we take a proactive approach with our property management team to actually then do something with the data, and to really try and improve the operation by the tenant of the building. And the last thing is solar energy. So we definitely want to place photovoltaic panels on all the roofs, and by that we can then generate a lot of green energy. And this is increasingly what tenants are actually asking about. And the very last thing I wanted to mention is that the energy that we buy, from this year, we are only buying green energy. So that's what we do at CTP with regards to sustainability. I didn't include any slides about what tenants are actually asking for, but maybe we can have a discussion on that.
Well, well, thanks a lot. It was insightful. I must say I didn't even think about some of these measures. So that was very practical and insightful. Well, that's actually my question. You know, I was. First of all, what do the tenants really want? And second, you know, I am a commercial person, so at the end, my question will be commercial. Well, it's probably not the best question, but is it possible? How far you can reflect the certification, the environmental friendly building in your rent levels? How far can you reflect it? Or is it more a must for certain tenants to simply have to, because they want a certain quality? Is it part of the basic quality levels, or can you actually get an upside in your rental and reflect it in your rentals? So.
Mm-hmm. Yeah, that depends. It's on a case-by-case basis, of course. I give you one example. It's really interesting, actually. Large German e-commerce company. I've been talking to them for a long time, and sustainability always super high on the agenda. And then last week, they sent me an email. We are going to launch a developer tender for a new 100,000 square meter warehouse, but it will only be about price. So, okay, there you go. So yeah, they're not going to pay a higher rent for a more sustainable building, probably. That's what it looks like. But I give you another example as well. There was a competing German e-commerce company, and they actually decided to go for a different location country-wise, based on where the energy was actually, how the energy was being generated. So a brown coal is not very popular. So they actually, because of that, decided, okay, then we will go to a different country. And as a result, they sacrificed paying a higher rent for that, because the market rents in that country are simply higher than in the other country. So yes, it depends. But the trend is going upwards. And the reason why it's going upwards is especially when the tenants have to take responsibility and actually take responsibility for their actions. And the biggest decision makers are then the consumers. The consumers are then going to punish companies for not being, if they will start punishing companies for not being green, then that will really hurt the business. And then companies will increasingly want to be in a green building.
Yeah, that's good. Maybe my one question to when CTP went through the certification process and you ended up very good or better levels in the BREEAM certification. Did you consider these levels above very good from the commercial perspective? Is it an sort of an equation for you, like cost benefit analysis for each step? Does it make sense to go above very good? Do I get more commercial benefit on the next step, or is this part of the when the certification is being done, is this cost-benefit analysis for different levels of the certification is part of the game?
Oh yeah, absolutely. So very briefly, BREEAM in use, excellent. That makes financial sense. Outstanding. I mean, in most cases, it's too much. It doesn't make sense to make that investment.
And maybe, well, because Richard was mentioning many aspects in his presentation, one aspect also is that the sustainable property portfolio attracts better financing. That's the fact. And I think we are seeing it, and we're going to be seeing it even more, and it's an important thing. Well, does it equal on the other side in a lower yield expectations for you as an owner or investor in these buildings? Do you expect this will reflect in the lower yields?
Yes.
1-to-1.
Yeah, we get better financing. So investors are definitely prepared to pay a premium for, or the lenders, the financiers are prepared to pay a premium for green bonds. You know that we issued bonds and they are green. Yields, that's an interesting discussion that we are having with our valuers, because you can affect the value of a building, roughly speaking, in two ways. You can increase the rents, or you can lower the yield. Yeah. So they tell us, please achieve higher rents for your green buildings, then we don't have to lower the yield. So yield, as Richard also will say, it's about evidence, market evidence, and there we're still struggling, I think, a little bit to have real market evidence that certified buildings actually command better yields.
Right. But as Richard, you said, you quite expect this process to accelerate, and therefore, actually, the yield reflection will probably.
I think so. Like I said, the problem from a valuation process perspective is quantification, and especially in an environment now where we don't have much data at all. The issue is accentuated. But once things get moving, we have more data. Maybe we will start to see that spread. But there's no doubt in terms of tenants and investors. I mean, I was amused by what Bert said in terms of the fact that ultimately it comes down to price. But these companies, these tenants, they do have a list of criteria, and it's quite obvious that the environmental and sustainability piece is in that list now. So that is a change, and maybe it creeps up higher and higher. And I would guess, like for like, two buildings that are the same price, same location, all these factors are equal. If one's more environmentally friendly than the other one, then I guess right now that's the one that an occupier would choose.
And you mentioned it very nicely as well, that it's about rent, service charges, and then for industrial buildings, typically tenants pay for the utilities themselves. So what we do when we speak to a tenant, we don't only speak about rent, we talk about total cost of occupancy, and we show them this is the projected level of what you will spend on utilities for the next 10 years in this building, in our building. And this is an educational process that we really only started very recently, and that we want tenants to start having a look at this seriously, and to also get this information on other buildings, and go a little bit deeper than just the service charge, because you can be in a very well-serviced building and therefore you pay a high service charge, but to also have a look at the utility costs. And yes, if you're in a better quality building, then the projected costs on utilities will be lower. And the challenge is a little bit that the savings that you achieve with lower energy use, they are quite small compared to how much you pay on rent. So if you take a logistics building and it's used for logistics, then typically 85% is spent on rent. Then you have maybe 7 to 8% is spent on service charges, and then the rest is on utility costs. So if you save even 25% of your utility costs, on the bottom line, it's not making a huge difference. Having said that, though, logistics companies are operating in a very low margin business, super competitive. So any savings will actually help them.
That's right. Well, from the investor's perspective, finally, the comparable transactions are about the investor's appetite in this type of the buildings. I guess is it the fact that, say, a certified portfolio means more transparency for them, for some of them, for the bigger investors? Do you feel this is part of the transaction with the potential investors, or that they maybe see this portfolio less risky and therefore are willing to pay a premium in the transaction? Do you believe that the market is at this stage, or this is something to come?
We're at the beginning of that. I mean, I think if I think about myself as the investor, which is ultimately what a valuer does when they look at any piece of real estate, we put ourselves in the shoes of an investor. I think if you're seeing green certification, if you're seeing green technologies in a building, I think that does contribute to a perception of the quality of real estate. So I think it does already have an impact in that respect. It does emphasize quality. A good building will have the best technologies that are available, and they will be the greenest technologies that are available, by the way. But in terms of the binary, does certification add 10 basis points to a property yield in the mind of investor? Almost impossible at this point to say. Yeah. But I do think there is this. So much about valuation is about what's implied. We use these yields, these initial yield or your risks yield. Everything goes into that one number, and it's very difficult to extrapolate the specific contributing factors. But absolutely, even if it's a fractional piece of the pie at this point, the environmental side of things is in the equation, albeit how big or small, it's difficult to say.
Well, Vendula, when having you on with us, did you share that view, or are you more skeptical? I think there is nothing bad about being skeptical about the impact, or more.
No,
the impact is actually bigger.
Basically, I would agree what has been said. I just want to again repeat that it's really challenging for a valuer to quantify the impact. Is it 10 basis points, or is it 50 basis points? What is it? And also there is a lack of direct evidence which would say, okay, this was a portfolio or asset which had the certification and was transacted at better yield. It's not really that clear, and as said, the market shows us where the values goes and where the yields are, but basically I think it is a trend, and today all the new buildings already have some kind of certifications, and today some of the investors wouldn't look for buildings which wouldn't have any kind of green certification. So I think it's a trend, and it's something which will be here and will be more and more common.
Well, Bert, one question on the transaction that CTP completed, which was a bond financing. So hopefully you can share some of that. So, I mean, these are finally, you issued green bonds, right? So when you had these considerations about the transactions and bond refinancing, what did you quantify a benefit to you as a group in having these bonds green certified rather than issuing the regular bonds in terms of demand or an interest rate? Mm-hmm. Can you share any insight on that?
Oh yeah, we were very, very excited about it because we also heard from investors, from consultants actually, that are more active in the investment market, not real estate, but the big investment banks. They told us, like, really try and get green bonds, and they didn't really quantify why, but they just so it's very because you're issuing bonds, you do it done it now twice, but you do it at that moment in time. You cannot compare. I do it now. I do green bonds, and then I don't do green bonds. So it's difficult to quantify it. But looking at how excited and enthusiastic the investment bankers were about the fact that we were able to issue green bonds, that gave us a signal that it's a really important part of the entire value proposition.
I fully agree. I mean, our expertise in this thing is about regulation, and I think what basically we discussed that topic, and we might have a separate discussion on that later on, organized event. But I think what drives this is that there starts to be a regulation on how much the investors actually can allocate to the green financing rather than to the regular one. So it basically meets the thing from the other side, from the investor's perspective or bank's perspective. So I think this it all shows in a context that Richard, you were pointing out how all these things are interconnected. So there is a commercial aspect, there is a financing aspect, there is a tenant expectation that simply has to be fulfilled. There's a reputational matter. It's a PR at the end, but it works also financially, which is a great thing. That's why it's going to continue. Mm-hmm. So I think we got we pretty much we do not want to takes time of the audience longer than we promised. We got towards the end. I'm just going to check if we have any questions in the chat. So either we were so exhaustive, or but we see many people being on the meeting, but I see no questions. So anyway, I think we had a very interesting discussion. I'm glad this was an interesting topic. Not only the valuer's perspective, because here really what we said is this is not about valuation only. It's not a reason why. It's just part of the whole thing. So I'm very happy we could discuss this. I'm happy we heard real insights of a developer and investor into this type of properties. I would like to thank Vendula, Richard, Bert, you for participating in the panel and finding time to actually show up and deliver the presentations. Simona, thanks a lot for organizing this together with RICS. Also, thanks to our marketing this time. I must say we run without any technical difficulties, so that's a good thing. That's a good thing. Thanks to all of you who were with us today, and hopefully looking forward for seeing you or talking to you at some next events.
Just one more comment. The whole event was recorded, and you will be able to find the video on the Czech Green Building Council website, the czgbc.org, in a couple of days for future reference. And I would like to thank all our panelists who were just brilliant, and once again KPMG for their hospitality. Thank you very much, and wishing you all a very nice evening. Goodbye.
Thank you. And Vendula, can you stay with us for a second? We just want to, thanks a lot.